What's going on, guys? It's Luke here, and today I wanted to make a video talking about my strategy. So I'm going to go over this as briefly as I possibly can. I'm not going to be able to hit every detail in this video, but I'm going to try to cover as much as I can. I'll probably have to make a part two. A lot of what I'm talking about, what you're going to see where I talk about the 5-minute, I talked about mainly in my video where I did a video on order flow a couple days ago or about a week ago. So I'm going to link that in the description so you guys can check that out if you want a little bit more of an in-depth explanation about order flow and when I talk about order flow and the shift. So check that video out. In this video, I'm going to go over the basics of the strategy and I'm going to show you guys 3 examples. I'm going to try to make this a pretty quick video where I'll do more parts hopefully, and we'll see how this goes. So my strategy is just only NQ and ES. So all I trade is NASDAQ and the S&P 500, okay? So step 1, we're going to be marking out 4-hour and 1-hour highs and lows and imbalances. So you're just going to be marking those out, the ones that are relevant towards price action for the day. Obviously, you don't need to be marking out 4-hour highs that are like super far away from price action. You just want to be marking out the relevant higher time frames, so the 4-hour and the 1-hour highs and lows and imbalances, okay? Then once a level is either swept, so either a high gets swept, a low gets swept, or an imbalance, a bullish or bearish imbalance gets filled, you wait, you scale down to the 5-minute and you wait for the 5-minute to shift. So you basically want to see the 5-minute order flow shift from bullish to bearish or bearish to bullish. And that can be based on invalidations of fair value gaps, retests of fair value gaps, inverse fair value gaps, all that stuff. So when the 5-minute finally confirms a shift and continuation, we would scale down to the 1-minute chart. We look for a break of structure, a fill of a fair value gap, and a close in the direction of the trade outside of the fair value gap. And we're just going to be targeting the opposing low resistance liquidity and imbalances or equilibrium. So it's a pretty simplified strategy. We're just looking for a sweep of a high or a low or a fill of an imbalance. We scale down to the 5-minute. We look for a shift in the order flow from bearish to bullish or bullish to bearish, whichever type of trade you're looking for. Once the shift is confirmed, whether that be say, for example, we inverse a fair value gap on the 5-minute, we break structure, retest a 5-minute fair value gap, whatever. We have a shift and a continuation confluence. We'll scale to the 1-minute, look for a break of structure, a fair value gap, and a close, and then we just target opposing liquidity. That's the recap, and that's like the basics of the strategy. So we're going to go over 3 examples, so let's get into that now. All right, guys, so let's get into example number 1. This will be on ES, the S&P 500. So step 1, again, I'm not going to be able to cover every single detail in this video, or else I'd be literally making like an hour to 2-hour long video, and I'm not doing that. So I'm going to try to make multiple parts, but this is just to go over the basics and just to give you guys the concepts. So we have, okay, let's put this tool back, okay? We have lows formed right here. We have a move up and a move down. We have an hourly low right here. So we're waiting for, just for example, there's obviously things that can go into this trade, right? You could be looking for equilibrium. You could just be saying, we're in an uptrend. I'm anticipating price to come up. Okay, we're waiting for lows to get swept so we can continue up, okay? So in this case right here, we have this low formed right here. So once liquidity gets swept to the downside, I'm saying, okay, I want to be looking for longs, okay? So we sweep these hourly lows, which are these higher time frame lows, and from here I'm willing to scale down and look for trades to the upside, okay? So the most important part is here, we swept lows. Okay, that's step 1. Step 2 is we're going to go to the 5-minute chart, and what you want to see is a shift in order flow. Now, let's go back on this candle right here. So as you can see at this point right here on this leg down, price on the 5-minute is looking bearish. Most people are going to be wanting to short here, okay? But what we see here is we create this 5-minute fair value gap, this bearish fair value gap right here. And then as you see, price breaks above it and it retests it and it fails to close below it. So that means bearish order flow was disrespected and bullish order flow is being respected. So not only did we close above and invalidate this bearish fair value gap, we also retested it and treated it like an inverse, and we continue to push up. From here, I know that order flow is shifting bullish. Another thing, we have this bearish fair value gap right here. And on this candle, we close above it. So we invalidate this one as well. So we could say, okay, if price comes back in here, we invalidated this fair value gap and this fair value gap. We closed above both of them. We inverse this one. If we can inverse this one, pull back, we can look for longs. another thing that we can see is we have all of this easily attainable low resistance liquidity. So we're anticipating price is most likely going to want to come up, take this out, and then we look to the left for more targets. And if you look to the left, we have these highs right here, this imbalance, and the end of this imbalance right here. You could target all of this. Okay, so again, higher time frame liquidity sweep. 5-minute bearish fair value gaps get inversed. They get invalidated. Orders flow is shifting from bearish to bullish. We scale down. Again, if we mark out this bearish fair value gap, we see we get this pullback in on the 1 minute. Then we can look for a long. On the 1 minute, we wait for price to come back in and inverse that 5-minute fair value gap to show that not only did we disrespect bearish, the bearish order flow, we're respecting bullish continuation order flow. So I'm going to press forward here. We have a 1 minute break of structure. We fill this fair value gap on the 1 minute. We get a bullish close and we can enter the trade off this, put our stop loss here. We could even put it below here. It doesn't really matter. And we're just targeting stuff on the left. So obviously this here would provide a good risk to reward ratio for us. So we're going to be looking to target on the 1 hour. We can look to target this high, the end of this 1 hour imbalance right here. And we could have a runner to the end of this 1 hour imbalance right here, right? So obviously if we press forward on the 1 hour, this was already done and this one hit, take profit. I believe I actually took this trade, but yeah, again, follows all the rules. Higher time frame liquidity sweep, 5-minute bearish fair value gaps get invalidated, inversed. So we shift from bearish to bullish order flow. And then on the 1 minute, we have the bias and the order flow shifting. 1 minute, we're just simply looking for a break of structure, fill the fair value gap, bullish close, and we target opposing liquidity, low resistance liquidity, all of that. So that's going to wrap up example number 1. Let's get into example number 2 on ES again. All right, guys, example number 2, again on ES. This one's going to be a bearish example. So basically the same concepts. We're just going to run through this pretty quick. In the after market open, price comes up, it takes out these highs and these highs. So from here, I'm willing to scale down because we see we have a lot of low resistance liquidity down here. What I'll show you in a second, we go down to the 5 minute and we see we have all this low resistance liquidity right here. And these are all swing failure patterns. So this low hasn't been taken out, this low hasn't been taken out, this low hasn't been taken out. And then we have these London lows down here, which are our main target. Again, session lows like London lows and Asian lows, session highs like the London highs, Asian highs, and the previous day highs and lows are always going to be very strong draws on liquidity. So this would be our ultimate target, right? I think I actually did take this trade. I can't remember what trade recap it is, but I don't remember if I took it exactly like this, but pretty much the same idea. Again, higher time frame liquidity sweep. That's step 1. Scale down 15 minute. Okay. We have this 15-minute bullish fair value gap right here. Okay. And we run right through it. So from there, if price was going to continue bullish, it would have held that 15-minute imbalance, and it didn't. So it ran right through it. So that shows us that price action is shifting to the downside and order flow is shifting down. Now, we get these big bearish candles right here, and then we create this bearish imbalance right here, and price comes back in and taps into this imbalance. From here, I am very confident that so first of all, we invalidated this bullish fair value gap, the 15-minute one. We came down, we broke structure to the downside after breaking below this low, and we are retesting a continuation confluence. From here, we anticipate that the continuation confluence will hold and the price will push us down to take out these lows, these lows, these lows, and ultimately the London lows, okay? So from here, I'm willing to scale down. Obviously, a trade or a pullback up to like equilibrium or something like that would be a lot better. But at the end of the day, we are still within a bearish imbalance. We invalidated bullish imbalances. So we know that order flow is shifting and the bullish confluences are getting disrespected while the bearish continuation confluence is getting respected. So from here, I'm going to scale down to the 1 minute. On the 1 minute, super simple. We're already in a downtrend at this point. We have another lower time frame liquidity sweep with this high right here. We have a push down, a fill of this fair value gap, and we get a bearish close, and you can literally enter right here, or you could have even entered on this candle right here, okay? Regardless, you put your stop loss above the wick, and you can target the session lows, which were the London lows right here, and you would have hit about 2.18R on this trade. Now, if you would have put your stop loss to break even, let it run, you would have been stopped out before it continued to push down. but the point still stands. You would have caught a 2.18 R trade. Once again, same thing, higher time frame liquidity sweep. Okay, we scale down. 5-minute bullish fair value gaps and the 15-minute bullish fair value gap get invalidated. They get run through. We retest the 5-minute fair value gap. From here, we see the buildup of low resistance sell side liquidity and the session lows. I'm confident that price is going to come down to take them out. Scale down to the 1 minute. We're in a downtrend. We get this extra confluence with this little liquidity sweep right here. Push down, fill a fair value gap, give ourselves a bearish close, stops above the high, target the session lows and this low resistance liquidity down here. And that's it. So that's going to wrap up the second trade. Let's get into the final example, and this will be on NASDAQ. All right, guys, example number 3 here, and this one is going to be on NASDAQ. This is going to be another liquidity sweep example, and I'll probably make a separate video where I do examples with imbalances, but it's literally the exact same concept. Instead of just sweeping out liquidity, you're just filling the imbalance, and it's the exact same thing. I have been using different concepts on the lower time frames a bit. If you actually watch my trade recaps, you'll see that. I'll try to make another video, but it's all based on order flow. But again, I'll try to make more videos just going more in depth. This is just to go over the basics of the strategy. Okay, so this trade here on NASDAQ, we have this higher time frame liquidity sweep. We took out the London highs, we took out the Asian highs, and now at this point we have this buildup of low resistance liquidity. We have the London lows and the Asian lows down here, so we're anticipating for price to basically come down and correct that and sell off, right? So what do we need? We need to see bullish order flow get disrespected and bearish order flow to get respected, okay? So first we look on the 15-minute. We have this imbalance has already been reacted off of. So we have basically no imbalances to kind of disrespect on the 15-minute. But on the 5-minute, we have this bullish imbalance right here. So we wait basically for price to run right through that. So price runs right through that. That shows that 5-minute structure is getting, on the bullish structure is getting disrespected, and 5-minute bearish structure it's starting to shift. Okay, next we push down all the way here, we run through those fair value gaps, and then we have a retest of a 5-minute bearish fair value gap. So again, the bullish order flow is getting disrespected because price is running through it, and bearish order flow is getting respected because it's tapping into this fair value gap and it's holding it. Once we get this tap into this 5-minute fair value gap right here, we're willing to scale down and look for shorts targeting these lows, these lows, these lows, all these lows. So you have the London lows and the Asian lows. I'm just going to leave the take profit all the way down to the Asian lows because I'm anticipating all of this, because these are all swing failures. These are all going to get taken out, in my opinion, right? So again, higher time frame liquidity sweep, disrespecting the 5-minute fair value gap, pushing back up, retesting a 5-minute fair value gap. If you got a test of an inverse, it'd be the same thing. Did this hit equilibrium? No, this did not hit equilibrium. But again, a pullback to equilibrium would be great too. But from here, once we tap into that 5-minute fair value gap, we are looking for shorts. Not the cleanest example here, but in this case, we're in a downtrend. For me, what I just saw, because I actually took this trade, we had this strong bearish close right here, and I just took it right here. Again, you'd want to see a break of structure. We're already in downtrend structure. And we had this little mini liquidity sweep right here. So I was just willing to take it here. But again, if you wanted to be exact with the strategy, you'd want to look for a break of structure, fill of a fair value gap, bearish close. You want to enter something in there. But the same concept again, we're in a downtrend. We're favoring the 5-minute order flow, and we're just anticipating all of this liquidity to get taken out. And you target the Asian lows, and that's it. So to go over it one more time, higher time frame liquidity sweep right here. The order flow gets shifted from bullish to bearish after disrespecting the fair value gap and respecting a 5-minute fair value gap. 1 minute in a clear downtrend. We take it on this bearish close right here. Again, you could take it on a break of structure and a fill of a fair value gap, but it's the exact same concept. And then you just target the session lows and the low resistance liquidity, and you would hit a 2.3 R trade right here. So that's going to wrap up example number 3, guys. And that's pretty much going to wrap up this video. So I hope you guys enjoyed. I hope you guys took some pieces away from this that you could apply in your trading. Again, all it's based on is higher time frame liquidity sweeps or imbalance fills, a shift in order flow based on the 15 and the 5-minute, and then the 1 minute basically just a break structure, fill a fair value gap, and show continuation in the direction you're looking to trade. That's literally it. So I'll be back with another tips and tricks video soon. Try to go over some more imbalance examples, or try to go over some more lower time frame examples. But yeah, that's going to pretty much wrap up this trade recap. Not trade recap. This is I'm so used to saying that. This is a video talking about my strategy. I hope you guys enjoyed. I'll be back with another video soon. Trade recap, more educational shit coming soon. In the meantime, give me a like, subscribe, follow me on Twitter. I'll see you guys in the next video. Peace.